Good morning, dear learners, and welcome you all to the next lecture of my course on financial literacy. This is week number 7, Investment Avenues, and lecture number 34, Health Insurance and Retirement Planning. In the previous 3 lectures of this week, we had discussed about the insurance schemes, the pension plan policy schemes, and we had understood the different type of financial products that are available to us that can serve us with providing the insurance coverage for our life as well as an investment avenues also. That means giving us the benefits of long term investment also. In this lecture, we will be going to understand, apart from the life insurance scheme, what are the other health insurance schemes available to us, with the help of which we can manage some of the emergencies such as health emergencies involved in our life with the help of taking these insurance policy, as well as will also delve into the topic of retirement planning for understanding how different products that are available to us can help us in our retirement planning and having us an option of earning constant and regular income at the age when we will not be able to work. So, in this lecture we will be going to discuss about the various types and the concept of health insurance scheme. We will be going to understand the meaning of retirement planning, the steps that are required to do the retirement planning, as well as the importance, the significance of retirement planning in an individual's life, and we will be also going to understand the different types of retirement accounts that we may have and the benefits of all these retirement accounts. So, let us have idea of the health insurance scheme. What do we mean by the health insurance plan? Basically, it plays a very vital role in providing you financial protection in case of any kind of health emergencies. These are the type of insurance scheme that provides you protection against the unexpected medical expenses, and it also help you to take care of your health by giving you an option of covering the financial damage that may be caused to you due to your ill health. In such cases, the health insurance schemes provides you multiple kind of options such as reimbursement of the medical expenditure or cashless treatment into the hospitals. So, thus it gives you an option of having a secure financial planning in case of any kind of health emergencies. So, in today's world of uncertainties where emergencies can arise at any time, the health insurance is an essential part of our financial planning to secure our life. In a financial plan basically provides you a financial cushion at the time of any health emergency to you as well as your family if they face any kind of unexpected medical expenses. So, for meeting the various challenges that we may face due to inflation, our medical expenditures are rising day by day, as well as rising healthcare cost may be also there in the market. We can take the help of the health insurance policy, and we can provide a financial security to our family member to meet such kind of unexpected financial challenges. So, it gives an option to all those families who are especially belonging to the lower income group, and it helps them not to struggle to afford the proper treatment for their family members. So, basically health insurance bridge that gap of earning less amount of revenue or income and paying a lot of medical expenditure for getting health care from the hospitals and the medical agencies. So, it ensures that the financial constraint do not become a barrier to receiving the necessary medical care for anyone's life. So, basically it is very important for everyone to have a health insurance plan. The various benefits of buying a health insurance plan for your family are: It covers your entire family at a less cost. So if you are taking a family insurance plan, in such case the family health insurance plan provide you the insurance coverage at the minimum cost to each and every member of your life. So your spouse, your children, for each medical expenses, the health insurance coverage will be provided you under this scheme. Hospitalization expenses are covered under this scheme in case if you meet with any accident or any other kind of illness arises and you need to get hospitalized, then all the expenses are covered under the health insurance plan. Lower prices while purchasing online. If you are purchasing the health insurance plan with any online platform, in such cases the cost related with the health insurance plan will also be lower as compared to the other policies. It also covers the COVID-19 treatment. After the pandemic, it is very necessary that we must have a security system so that to financially secure ourselves with the effect of the COVID-19. So it also provides you the COVID-19 treatment, as well as there are various options to add the riders and other benefit into the health insurance scheme, and it also provides you the multiple kind of tax benefit to minimize your tax burden. So these are the different benefits of the health insurance scheme. Basically, there are two ways by which the health insurance company provide you compensation for your medical expenses. One is known as the cashless treatment and the second one is known as the reimbursement of the expenditure. In the cashless treatment, the policy holder is not supposed to pay anything to the hospital, as the insurance company pays all the medical expenditure of the policy holder directly to the hospital. In the case of reimbursement, the policy holder is supposed to settle the medical bills at first, and later the reimbursement of expenditures are made by the insurance company after a proper evaluation of the medical expenditure done by the policy holder. Now, let us understand the various types of health insurance policy that we may have and we can purchase it online. The number one is individual health insurance policy. Individual health insurance policy is issued to a single person and it covers the expenditure of individual medical expenses only. Whenever a person purchases an individual health insurance policy, they are insuring only their own health. That means the insurance coverage under the individual health insurance policy is provided to a single individual. After that, family floater or health insurance plan. In the family floater policy, coverage is provided to the entire family of the policy holder, that each of the family member who is financially dependent on the policy holder will get the benefit of such kind of health insurance plan. So in a single health insurance plan, instead of individual policy, you can take the insurance coverage for each member of your family for providing them health insurance coverage. Then next one is the senior citizen health insurance plan. The senior citizen health insurance plans are specifically designed to meet the healthcare needs of the older adults. That means the medical treatment related, the age related conditions that are very expensive, that can be very easily paid with the help of the senior citizen health insurance plans. This kind of health insurance policy may be a little bit costly for the policy holder, but the medical expenditure in case of the older age can be very expensive and financially burdensome for the person, and that is why without a health insurance policy in the older age, the treatment of the illness may become a difficult task for the individual. So they must take the senior citizen health insurance plans to avoid any kind of financial burden in case of treatment of their illness. Then comes the top up health insurance plans. This provides some additional coverage beyond an existing health insurance plan to the individual or the family insurance plan. It can be used for the hospitalization and other related expenses once the sum insured under the base policy is exhausted. So top-up health insurance plans provide you additional coverage for some other kind of emergency expenditures which had been not included in the terms and conditions of your previous health insurance plan. So by paying some extra amount of premium, you can take the help of top-up health insurance plan, and you can also add some benefits for the health insurance coverage into such kind of insurance policies. This is the different types of the health insurance policies. Now let us understand what different kind of benefits of the health insurance we may have. It helps us to cover the medical expenses such as the cost of medicine, hospitalization and other treatment related cost is taken care of by the health insurance policy if you have taken the health insurance. It also helps you to reduce the stress. So by covering the various types of expensive treatment related expenditure on the medical treatment, the health insurance plans helps you to reduce the financial stress during the emergencies of health. It also helps you to provide the timely medical treatment by providing you the financial support. The health insurance policy can give you prompt medical care. It can help you and your family members by giving you a prompt and immediate treatment of the particular illness, and it can help you to recover quickly and to prevent further health complication in the future. It also provides you multiple kind of tax benefit, such as under section 80D of the Income Tax Act, you can claim tax deduction for the premiums that you have paid for purchasing the health insurance policy, including that of your spouse as well as children and parents, those who are financially dependent on you. So for all these different kind of family members, if you have taken any insurance policy in case of health insurance and you are paying premium, you can get a deduction under section 80D. After that, next benefit is cashless treatment. Many insurance plan also offer cashless treatment at the various network hospitals, so it also provides you to face any kind of financial crisis during any health emergencies. So these are the various benefits of the health insurance. After that, let us understand what are the various essentialities that you must fulfill for purchasing the health insurance policy, or what are the criteria on which you need to judge why and what kind of health insurance plan we must take. So the first criteria is age criteria. You need to check the age eligibility before buying the health insurance plan, as different health insurance plan have some age restriction. You should ensure that you must fall within the age limit of the health insurance plan that you are purchasing, as well as the cost of the health insurance plan may also fluctuate due to the age variation of the policy holder. So age criteria must be checked. After that, insurance company comparison. You need to compare the multiple companies, those who are providing health insurance products into the market. What is their claim settlement ratio? What is the coverage amount that they are providing on the medical treatment? What are the terms and conditions that they are offering or demanding? All these things must be compared, and then you need to choose one of the best company that may suits to your needs related with the health insurance plan. After that, waiting period is there. That means the waiting period here refers to the time during which you cannot make a claim. So after taking a health insurance plan, a certain time period is given to you as waiting period in which you cannot claim any medical expenditure from your plan. So you need to choose a plan that is having shorter waiting period if possible. If the premiums are a little bit higher, you can pay the premium and choose the shorter waiting period plan for ensuring the good treatment of your medical illness. Then coverage for specific treatment and diseases. Some treatments and diseases such as piles fistula are covered only after a specific duration, after 2 or 3 years of the policy. So these are referred to as specific diseases. You need to first understand the terms and conditions related with the coverage of specific treatment and diseases with your policy company, and then only you should confirm that which kind of health insurance policy you need to purchase. So these are the criteria on which you need to judge the health insurance policy and select the best one for you. Now, the next part of the lecture is related with the retirement planning. This is a very important component of the personal financial management, where one needs to take care of the fact that there will be an age when you will not be able to work and earn for yourself in a sufficient manner. In such case, how you will be going to meet your expenditures and your financial emergencies? So for that, you need to do retirement planning. Basically, it is a process of preparing for life after retirement. That means the retirement typically begins at the age of 60 or older. So after that age, how you will be going to have regular income for you, that needs to be planned at an early age. So it involves managing your future expenses, identifying the multiple kind of income sources at the old age, aligning your finances with your post retirement goals and lifestyle also. So the retirement planning, basically it is a kind of financial planning that may be futuristic in nature, where one individual needs to think what kind of lifestyle they want to have in the older age, what post retirement goals and objectives they want to achieve, as well as how they will meet their day-to-day expenditure in the older age when they will not be having a regular source of income. For this, you need to plan the regular amount of saving into some investment avenues, so that you can have a sufficient return at the old age to fulfill all your dreams and financial objective. So the tips to retirement planning are given here. First of all, you need to start saving now. Whatever age is earlier, say as 18 or 20, or at whatever age you have started earning for yourself, you need to start saving for your retirement at that age only. You need to diversify your investment into different type of investment avenues. So your portfolio diversification is very much necessary, as well as you need to explore the various types of insurance options, so as to ensure yourself with the various types of risk and threats of your life. And you need to prepare for your financial emergencies. And finally, you need to think about your retirement goal, what kind of lifestyle you want to pursue, what are your dreams and what are your plans in the post retirement age. That needs to be thought of, and accordingly the investment into the various types of retirement planning options should be done. The various steps that you must do in case of the retirement planning process are: you first need to calculate your net worth. You need to assess what total amount of assets and liabilities you have to determine your current wealth, and accordingly you can invest a portion of your total net worth into the retirement saving. After that, you need to assess your income and expenditure. You need to evaluate your present income and present expenditure that you need to do. This will serve as the foundation for your retirement planning. After understanding the income and expenditure that you are having at present, you can easily calculate what amount of maximum savings you can do, and accordingly retirement planning can be done. Then you need to determine your lifestyle at the age of retirement. That means what will be your retirement objectives, what will you do at the age of your retirement, such as you want to travel the world, you want to pursue your hobbies, or you want to live a relaxed life. So for all these different type of retirement related objective, you need to decide how much total wealth is required to fulfill your dreams. So this will influence how much you need to save at present. Then you need to set your retirement goals. You need to set specific goals like buying or retirement home for yourself, traveling or leading a luxurious life. So whatever kind of lifestyle you want, accordingly the investment option must be chosen in case of retirement planning process. After that, you need to also estimate the future, that means future expenditures such as some emergency medical expenditures may be there due to inflation, rising food prices, rising house rents and leisure expenses may be there. All these different type of future expenditures must be estimated for an effective retirement planning by an individual. After that, you need to identify the future sources of income for yourself. You need to plan for your income sources post retirement, such as there may be pensions, there may be annuities or insurance or any other kind of investment returns that you may have at the age of retirement. All these different incomes must be thought of, as well as you need to calculate and understand what periodic amount of annuities you may have at the age of retirement. After that, you need to choose a saving strategy. You need to select an appropriate saving strategy such as 401k, IRA or other types of retirement plans that are available to you for the purpose of investing your money safely into the retirement planning. After that, continuous review is also necessary for regularly reviewing your retirement plan so as to ensure that all the objectives of your retirement planning is aligned with your retirement objective, as well as it also is flexibly adjusted with the changing needs and the market conditions of the market. So these are the various steps involved in the retirement planning process. Your net worth must be calculated, income and expenditure must be assessed, retirement lifestyle must be thought of. You need to set your retirement goals, then estimate the future expenses, identify future sources of income, choose a saving strategies, and continuous review must be made. Now let us understand what is the significance of retirement planning. So it provides us a financial security. That means it ensures at the old age when we will not be able to work, a steady income stream must come to us for managing our day-to-day expenditure as well as for achieving our retirement objective. So it helps us to have financial independence in the post-retirement age. After that, it also covers our healthcare cost. Medical expenses in the old age normally tends to increase, and that is why it may pose some financial challenges or financial crisis for an individual. So an effective retirement plan may help to accommodate these rising medical expenditure and can provide you to have financial soundness. After that, tax advantage is also a benefit of the retirement planning. There are various plans such as 400k IRA that also offers you the various types of tax savings that can reduce your overall tax burden at present. Then it also help you to seek peace of mind knowing that your financial future is safe and secure, and you will not be going to face any kind of financial burden at the retirement age, at the post retirement age. Then it will also help you to reduce financial stress and anxiety in the old age when you are not actually working and earning income for yourself. Then it also helps to combat the effect of inflation. So if you will choose a suitable plan for you that will offer you inflation adjusted benefits, then this will help you some increased sum assured that will always help you to to offset the inflationary effect. So consider working with a financial advisor for the purpose of creating a portfolio that can beat the inflation rates of the economy. So this is how the retirement planning helps us to financially secure our future. Now some people may ask why we must plan for our retirement. What is the need of retirement planning? The life is so long, why not to enjoy at once in the present time? So basically why we should plan is, the answer is the here. We must have financial stability in our life to enjoy our life, as well as mental peace and physical health is also necessary for enjoying our life. Wealth generation gives you the freedom of choosing the lifestyle that you want to have, as well as tax benefits are also there of retirement planning that can help you to reduce taxes and maximize your wealth accumulation, and hence give you a financial status of well-being. Now, key factors while considering the various retirement related planning are: retirement age. You need to decide when you plan to retire, early in your 50s or later in your 60s. The longer you work, the more you will earn and save for your older ages. So, you need to understand till what age you can effectively work and you can earn a sufficient income so that you can invest your money into the retirement related plan. Next one is the life expectancy. You need to consider this factor very importantly for the purpose of planning related with the retirement. Basically, while life expectancy can be precisely predicted for the human beings, but it may be fluctuating also. So, you need to estimate your life expectancy based on your health condition and your current lifestyle, and your family history can also help in understanding the life expectancy ratio. Then accordingly you can plan for your retirement. After that, investment calculations must be done. You can use the various types of tools like retirement calculators, medical tools, as well as loan amortization tables. See, these different kind of tools will help you to estimate the required savings that you need at the post retirement age, and accordingly you can decide about your present investments. Then you need to identify the various income sources where your income will come after the retirement, whether it is the pension, annuities or investment. Accordingly, you need to start early saving and investing your money into the pension plan, insurance scheme or any other kind of investment into the financial market. Then next factor for considering the planning related to the retirement is inflation. So, you need to always account for inflation while calculating the future expenses and saving at present for meeting your future expenses. As we have discussed the time value of money, with the passage of time the purchasing power of money decreases, and so at present whatever money you are having with you is worth more than in the future time period. So, you need to invest wisely to increase the value as well as the purchasing power of your money for meeting the inflationary trends. Now, let us understand what are the different types of retirement accounts that we can open for the purpose of planning our retirement. So, there is 401k. This is a popular employer sponsored retirement account where the employees can contribute a portion of their salary into the account, and contributions grow tax free until the withdrawal, and employers then match a portion of contribution into the 401k for giving a very peaceful as well as financially sound retirement to the employees of their organization. So, in such kind of plan, first employer will give you an opportunity to save your a portion of your salary, and then employer will also contribute into the plan for saving your future. Next is 403B. This is a retirement saving account for employees who are working into tax exempt organization like public schools, universities and hospitals. So, in such kind of the account, the contributions are made pre-tax, reducing the taxable income of the employee. So, early withdrawals here are not allowed because it can impose some penalties on the policy holder. So, they need to stop the early withdrawal for the purpose of maximizing their return from the retirement account in case of the 403B. After that, there is 457B. This plan is basically available to all the employees of certain government and tax exempt organization. It also allows you tax deferred retirement saving. And last one is the simple IRA. So basically these saving incentive match plan for employees are designed for small businesses and self-employed individual. So employers can make matching contribution into these account, and they can also have some simpler rule compared to the other retirement plans. So these are the various types of retirement account that are available to an individual for their retirement planning. According to the suitability, you can choose any one of them. With this, we come to an end of our lecture. I hope you will be now capable of understanding the importance of retirement planning and the options that you can choose for your retirement planning. Thank you.